Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing a friend of mine, Peter Grandich. How you doing today?
Always a pleasure. Blessed, happy New Year.
Yes. It's a good new year, off to a good start. Obviously, the metals are running. You know, we're above ground. I mean, that's the first and foremost blessing right there. But the metals are running, and so I definitely want to start there. So Goldman Sachs put out their recent report, and their top commodity for the year is gold, and so they're also looking at copper as well, but they're a little more neutral to bullish longer term copper, but gold is their top pick. And so I just want to get your perspective on that pick.
So, Darrell, I don't mean to belittle because I'm certain there's some good people at Goldman Sachs, but when I think of commodities, they're one of the last people that I'm going to look at. There's a lot of more independent people out there that I entrust and count on than Goldman Sachs. But I can concur with them in the fact that I still believe, as I have for quite some time, in fact, the news over this weekend, while the stock market may be reacting initially positively, and of course, as you and I speak, gold's up over $100 and silver's up $3 or $4, it's actually even more beneficial for the metals market, because what people have not grasped from the Goldman Sachs of the world, or what I call the don't worry, be happy crowd on Wall Street, which makes up most of the financial advisors in our industry, is what's transpired, why gold has done what it's done. And one of the big key factors, and why back in 2021 I sold everything to own physical gold, is the world is moving away from the United States, both economically and monetarily. And the selling point was the BRICS was to turn to countries and say, look at what these guys just did to Russia. And of course, you know, people were concerned, and they can cut you off at the knees as well. And now, who's ever in charge of the new membership drive, the BRICS, has got to be having a big smile, because now they're also going to say, look, if they don't like you, what they can do to you, you know. And no, but that's very serious. And that, yeah. I said to my very best friend and client, going back almost my entire career this morning, I said, think about this. Be honest. You're an American. I'm an American, even though I know you have a broad audience, including Canadians. And think about 25 years ago at the start of millennium. What are some of the countries you could name that you would consider strong allies? Well, first of all, right off the bat, I would have said Canada. We were the two biggest trading partners. You can cross either side of the border not even knowing you're crossing. It was such close. Now, you know, my Canadian friends tell me this. We still love you, Pete, but we really don't like your country anymore. And I think you can look at places like Britain and parts of Europe and all through South and Latin America and all, India, China. America has lost its dominance among the world community as much as Trump is at the moment, you know, banging his chest and all that type of stuff. And so that benefited because they realized that they would have to change the monetary system, that they couldn't count on the US dollar, which, as you know, I believe, and I'm not far from alone on this, it's terminally ill, it's dead, even though no one wants to tell some of it yet. But the bottom line is, this is only going to encourage that movement. That's only going to expand it. And China did something very smart this morning as you and I speak. Rather than beating the drums and talking, you know, about, you know, well, we're going to run into Taiwan now that you did this, they said, no, we're going to approach this legally. What they've done is not right. You can't. We have all these legal contracts with Venezuela, and they're going to basically look like the new nice guy on the block. And you got this bully Trump over here who's, you know, and by the way, add this, and I'm running on, but this is really important.
Yeah.
At the same time, Trump does not have the same political chips that he had this time last year. He has not succeeded on the trade front, no matter what those guys, you know, his mouthpieces, Ludnick and Navarro, want to tell you. There are no significant trade deals done. China masterfully played. Everybody thought China was going to collapse and the market was going to collapse, and yet they're exporting more than they've ever done before. But one of the other things that's happening now is he's losing part of his own political base. There are a lot of strong MAGA people. I'm neither a MAGA person nor I got the Trump hate syndrome. There are things I like what he does, there's things I don't like. But there are key players within his group now are saying, listen, you got to focus more on what's happening here. The United States is falling apart, and this is only going to serve them more to feel that way and all. So right now, yes, you and I talk Monday morning, air in the stock, but don't be surprised in the coming days and weeks that this is going to back up and actually hurt Trump more than it helped, at least as the stock market's looking at it. But it's extremely bullish for the metals.
Yeah, definitely a lot of things to unpack there. So I do want to start with to dive into a point that you brought up is the positioning in metals. So obviously the central banks were buying because of the de-dollarization was happening because of seizing Russia's assets, kicking them off SWIFT and things of that nature. Then also like the inflation, where why would we hold bonds if they're not really paying much? They're not even paying you a real rate. And so a positive rate. And so whenever we think of that and then you compile this Venezuela kidnapping, extradite, I guess they extracted him or whatever. I mean, I thought it was pretty like came out of a video game or something, like just the way the way that the news just brought it up, and I was like, what? They just went in the middle of the night and took him and his wife? Wow. But this seems to add more to that pressure of central banks saying, okay, we need to get out of the dollar. We need to, if they don't like you, they can just extract you or prosecute you or whatnot, or kick you off of the SWIFT or whatever the case may be. It seems like that just continues to compound. So I'm kind of wondering, do you think that central banks are going to be buying more gold now that this has happened?
Well, we know just at the end of the year, it was shown that the usage of the dollar as reserves has hit a 25-year low. So we know there's a continuing exit and moving away from the dollar. We also know that the 2 or 3 key players that were once extremely buyers of our debt, remember, this is still a country that's running. It's hard for me to say this because when I started 42 years ago, Darrell, I didn't know what a trillion was. We didn't have to describe a trillion. There wasn't trillion of nothing. Now we have 38.5 trillion running to 40 trillion real fast. And these multi-trillion deficits have to be funded. And with less purchasing of our bonds from overseas, we're going to have to do it more internally. And quietly, without really any fanfare at the moment, is that 4% level on the 10-year, which is the key treasury bond to watch, again, could not stay under 4% and is rising again, even though economically we're slowing down, even though inflation is supposedly slowing down and all. And at the same time, and I'm going to tell you listeners, pay close attention, we're on the verge of a major crisis in Japan. The bond market continues to see yields rising. The new management, so to speak, the people running the country say that they're going to have economic expansion at the same time with rates rising. And it's becoming less attractive to them to keep here or keep the yen carry trade going. And the moment that rug is pulled on top of everything else that's happening, again, these are all things that can only benefit gold. The only thing that can turn around and change gold overnight was a worldwide total implosion for whatever reason. Economically, all of a sudden, everybody's blowing up, or we go to a nuclear war or something. I've never seen, even though and remember, I used to root for gold to get up $20 to get above $300. Now we're talking about a $4,500 gold price. But given where it's priced now versus others, it's never had as much going for it as it does now. And I'm only going to say this is to double again. Now, I believe my target has always been 5,000. I think we're going to print at 5,000. I think we're going to print at 5,000 sooner than later. I think silver is going to print at 100. But to get doubles from there, especially in 1 or 2 years from that point, then the world got much worse off than even we are even speculating on at this point in time.
Mm-hmm. Got it. Okay, so I do want to touch more on the metals. I'm curious in this whole thing with Venezuela, do you see any benefit from that? So, like, I've been kind of trying to process it, like thinking about, okay, well, a lot of OPEC, they have a lot of, power and control over oil. And then Venezuela has like some of the biggest reserves in the world, bigger than Saudi Arabia is projected. And, I was kind of thinking like, okay, well, if the United States at some point doesn't need to get oil from Saudi Arabia or whatnot, then, or from the OPEC or, other nations over there, then it seems like that would benefit the United States in some ways. But I'm not fully sure. I'm sure there's going to be some guerrilla warfare groups or something. Like I know that there's been activity with over the years with communist nations, training up troops and getting politicians in place or whatnot to rebel against whatever regime change is trying to happen there. So I could see some of that happening. So just curious if you see any benefit from that, or what risks do you see there specifically with oil?
So one of the concerns would be is that, yeah, you yanked this guy out, but we've yanked a lot of people out over the years in cartels and all. Someone always takes the place. That's always the likelihood is. Now, is the United States going to literally put boots on the ground? And how is that going to be, accepted, there? Certainly the people of Venezuela seem to think that it would be better off if America at the moment was somehow more involved, because they've been living under such a dictatorship kind of authority, fear to even go out and say anything, that what can transpire. But I think he made an error in judgment here, and that was there was a duly elected person who was elected, but then this guy didn't want to leave, and yet we're not supporting that person. We're calling for a sense kind of a new election and all. I think that might have been a mistake on their part. We'll have to see how the Venezuelan people and all respect it, but are we gonna stand for having to get more involved like we did in Iraq and have to send military in there and support and so forth? And I think that just plays into the hands of the people who feel that he's not focusing here in America. Let me take this side note because I think it's important, Darren. I know you always want to get to the bottom. We have a two-tier economy right now in the United States. The top 10% Americans who own 86% of the assets are doing fine. They're the ones benefiting greatly from the stock market today and all that kind of stuff. But the rest, the next 14%, what's left, is owned by about 40% Americans, and then half of Americans don't have any assets, and half of them, or 25% of all workers, are now using some sort of debit just to get by and pay for food and all in all. We have all sorts of issues to look at. The problem is that group may be influential politically, but the rest of the group, which is so large, could be more strained because of these actions. And I don't think they're going to stay around too long. I'm noticing people who a year ago, Magna hats, Magna this, Magna that, are out speaking negatively about Trump now, especially the fact that they feel nothing has been done to the bad people that supposedly were part of the last administration and all the things that happened in Washington and all of that. And I'm wondering if they don't see movement there and continue to see this outside stuff, it's actually playing into the hands of his opposition. And remember this, in February, we basically start the election campaign for 2026. Primaries start to be, people get nominated because primaries are in June and so forth and so on. Most of his political chips that he made a year ago, he didn't get to move any of chips back to his side. And so this is going to become more, it's going to be more important for people investing to have a political and geopolitical view than any other time in my 42-year career. And there's a lot of moving parts, and I don't see any of them being a net negative to the metals market or gold in particular.
George and his team, a 16-year BRICS employee building some of their largest mining operations on the planet. We started a drill campaign, from the drill campaign moving into a full engineering report and study. We came out with our pre-feasibility study in 2021, and it showed a really impressive economic case for advancing the project. We'll have final definitive feasibility out in December of this year. So in the space of 4 years, fully engineered, fully permitted. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
Okay, got it. And do you have any thoughts on like big oil companies. So like my oil stocks jumped significantly, like Schlumberger and some others after this news. And then Trump came out and said, okay, well, we're going to have our big oil companies go out and start to, look at the situation in Venezuela. Do you see any benefits there or anything of that nature?
Well, I think that's going to take a lot longer than a day or two. Plus, like I said, I think that's still a very volatile situation at this point in time. Remember, China, through its campaign throughout the world of lending and financing lots of money for projects and all, has a huge investment there, something like $160 billion of agreements and all of that. This morning, they basically said that they are going to go into all the legal channels, all the various places where you can go through international law and so forth and so on. I think if they take the high road, don't run off to Taiwan now, even if that was their plan, and do something and take this kind of road, I think it's going to pull more away from the United States. I just don't think we're going to just see an acceptance that, okay, we yanked your guy out, we're putting our companies and everything in, and we're going to throw you a little crumbs at the end. I think people are going to still want to have ownership and all. Now, let's not forget also that for the third or fourth time, we were supposed to just be on the verge of peace with Ukraine and Russia. Let me tell you this, that shot, I'm going to tell you right now, it is not in Russia's benefit now to make any type of deal in Ukraine after just what happened and everything. Europe is a mess. The EU is over as we knew it. That's going to continue to move away and face a breakup in the next year or two. So there's so much political stuff happening both here and abroad that I really just think you sit back and I can't find the way, and maybe that's the only thing to be concerned about. I can't see any major way how the metals get hurt from this.
Yeah, definitely. Well, just speaking on the metals, so obviously we talked about gold. I do want to get your perspective on silver. You did mention $100 silver. I've been doing some research more into like this paper market and how the prices get smashed down and the kind of manipulation that's happening with the big institutions and the banks and such. And so it seems like they won't let silver get above a certain price. And then the Shanghai Gold Exchange is like, it's a lot higher than where it is here. And they're more focused on the physical. And so just curious in your perspective on all of that.
Well, I watched it for decades. In fact, in the 90s, when I joined the group that talked about manipulation, and we were called, crazies and all, and we discovered it was the case. So many people were eventually charged heavy fines and all that kind of stuff. They've been seriously damaged, that type of group, because they lost the physical market. London and New York don't control the physical market anymore. Asia does. And Asia is using metals for the proper reasons, not paper and shorting and that kind of stuff. So I don't think that there's any control or hold that they have. Clearly, some people were burnt in that. I think they're going to think twice. It's much healthier that we kind of build a new base where we are before we make that move to 100 and 5,000 on gold and all. But I don't think the manipulators have the same cards to play as they once did. I'll tell you what the story that's developing, I don't want to skip away from silver because I still think silver is going to do well. What people are recognizing is that this has been going on in copper as well now. And there could be a tremendous short squeeze in copper because of the unavailability of physical copper, yet people are, played the paper market on it. And this is all coming at a critical time when it's obvious that the world is in a race to control as much as they can critical minerals. And so, like I said, even though I don't think we'll have the same percentage gains that we had last year for, say, particularly on silver, I don't think it's going to double again, but they're all going to go higher. And where the money's going to be made because of that now, where the leverage comes in, is through the companies that explore, develop it, and produce it. That's why I would tell you that as much as I would be bullish on all three metal prices going higher, I would be overweighted in shares of companies versus the actual physical commodity itself.
Okay. Yeah, I definitely want to dive into that because that's something I've been researching as well. Okay, so obviously silver, there was another deficit for 2025 with the mine output and such. And I'm just curious if you see these deficits continuing, or at what point does high prices cure high prices? You know.
Well, here's the thing that doesn't get a lot of discussion. I shouldn't say that because I'm not living and breathing the junior resource market as I once had. But we've had a decade or more, probably closer to 2 decades, of serious decline of money put towards new exploration worldwide. First of all, the world 25 years ago, you and I were at your upcoming great show in Vancouver. We would spin a globe, we could point our finger without looking and say, yeah, we can go mine there. Not anymore. World has dramatically shrunk, and places where companies that have to spend billions of dollars to explore and develop and bring to production metals are going to go. The second issue that they have now is the current grades, especially in the copper market, have dropped dramatically. And now, of course, we're seeing worldwide drops in expected production because so many of these projects rolled. There's not a lot of new ore out there that's ready to come online anytime soon. This isn't something Trump seems to think that you could just spend a few dollars, take it out of the ground, and here it goes. And of course, one of the biggest problems here in North America, and probably the more safest places in the world to operate, if you're in the mining, somewhere's in Canada and the US, outside of maybe California or a couple other places, and that is regulation, how long it takes from the initial discovery to get ore out of the ground. And of course, now we recognize all the smelters and things that were necessary and all. So I think that as much as you say high prices, it doesn't, even if everybody and its mother decide to get into the mining business tomorrow and we all started exploring somewhere, even in our backyard, the bottom line is it's going to take a lot of years to find that excess supply to get to the levels where you can say, okay, now there's enough. I don't have to worry about chasing the price anymore. We're not anything close to that. That's why I still say, as great as the majors did last year, they can even do greater, even if we only make it to 5. Even if we don't even go up another dollar in gold or silver, those shares are still going to go higher because the free cash flow that they're making is tremendous. Here you have gold substantially now above 6,000 if you're a Canadian, in Canadian dollars, and the average cost is substantially below 2,000 for the Canadian producer. That free cash flow is just tremendous. Mm-hmm. And so I expect more M&A there, and I also expect them now reaching even deeper down to the more of the advanced juniors exploration projects, because that's the only way that they could ramp up their future resources.
Mm-hmm. There was some recent news that the U.S., I think it was the Department of Defense, Department of War, one of them departments, had partnered with J.P. Morgan on a smelter. And so do you see more of this activity happening within the United States, where more investment in these companies to get this metal out of the ground and such? Do you see more of that happening?
Yeah, here and all around the world. That is the big problem. In China, it's been unheard of in the copper market for smelters have to pay money to get ore. So there's no short to intermediate cure for this. There's nothing that gets done in a matter of days, weeks, or months. This is years process away. And of course, right now, Trump and his administration is focused on that. But what happens if things don't go that well for him politically, or for that matter, which no one thought this time year ago, that he could lose the House or even the Senate? Yet that is now, if you look at the so-called betting parlors, they're betting that at least the House is going to be lost to the Democrats. The Democrats, I'm not a Democrat, the furthest thing from a Democrat, but if I was the Democrats, I'd just shut up. Just stop wasting all the time, because there's going to be much more of a challenge. He is losing a part of his base, and as much as the market may be strong today on this. So I just think that whatever people realize on critical minerals, listen, Canada's facing that same issue. Canada, which I used to write a letter that was regarding Canada as investments, a place where natural resources is second nature, spends so much money away from Canada, it too needs to get its act together and put together a strong premium. And if I may, let's say, because I know you have a lot of Canadian viewers, the United States made another blunder. And the blunder was, and Canada's at fault for this too, Connie's at fault as well. If the United States made a deal with Canada like it did with Australia, where they're going to spend money together to look for new critical minerals, talk about being self-sufficient between Canada and the U.S., between commodities, food, water, the things, the natural things people would need if it came together versus such animosity now. But Canada needs to focus on the critical minerals as well. So that's why I said there's no short-term cures for this. And that's why I think, like I said, not only should the metal prices themselves work higher, but the companies that explore, look for it, and develop, I think are, here's another thing. And again, I'm running on, sorry, Darrell, but
No, you're good.
another positive for viewers that are interested in mining shares. We've had competition unlike anything before. The crypto market and the thousands, tens of thousands of crypto plays now that exist, some of that money would have come into the metals and junior market 20 or 25 years ago. It went into crypto instead. I will argue until recently that I thought the metals and mining market was smaller now than it was 20 or 25 years ago. But we're seeing a shift. We've seen, the cryptos kind of, first the NFTs blew up and then the mem coins. And we're seeing people show up now. Half, from what I understand, of presentations by majors in the fourth quarter saw generalist money managers attending, meaning people that normally don't live and breathe mining stocks are interested. So we're seeing that, and that's going to continue, I think, here, is because you can't turn on your news and not hear about all these resource issues, and some people are going like, well, wait a minute. What about how we're going to get it? And that's what I think is opening the door. I suspect, and I wish it well, and I know you're part of the group, I suspect this will be the biggest conference in years, if not decades, in Vancouver because of how many people recognize this now and the type of companies you need to look for to invest in. And so I see the interest just dramatically expanding here in 2026 for the metals and mining industry.
Yeah, definitely. I do want to get to the shares. Before we get there, I want to get your perspective on the gold to S&P ratio. So it hasn't made new highs since the 2000s, the dot-com bubble. I think it took about 5.5 ounces of gold to buy one S&P 500. And then now it's made a lower low, and it's rolling over. And so a lot of people have their money invested in, these kind of mutual funds, these big indices and stuff. And nominally, the number look like it's going up, like they're making money, but in gold terms, it's going down. Do you see that as a continuous trend?
I think the most important thing about the stock market, clearly in my New Year's commentary, it's out there and I speak about it on my X page. The thing everybody needs to focus on, the number one propellant of the stock market is passive investing. We now have well over 50%, some say maybe as high as 60, but some estimate in the mid 50% of all the money that's in the stock market now is in passive funds. When I started in the business, 1984, 90% of the investing was retail investors buying and selling individual stocks. Only 10% was institutional, and there was no computer trading. Now we have this single largest percentage. And then what's ever remaining, half or a little less than half, 2/3 of that at least is in some sort of algorithm trading program. Retail buy-in to be part ownerships of businesses is the least of the smallest. Why that's important is, and I talked extensively in my New Year's commentary and podcast about this, is that right now, people that are putting money into passive funds, much of it coming in automatically, being deducted from 401ks and other type of programs and all, those managers are not approaching their investments like we did for the first 200 years. It's automatic. It buys a certain amount of S&P type 500 stocks so it can track the biggest type of passive fund is an S&P 500 index fund. And it's automatic. I'm certain that's one of the reasons we went up dramatically today, because all this new money that people can contribute for 2026 hit up this morning, and the managers don't have the choice anymore. They have to match the performance. So as long as new money's coming in, they got to put it to work. And if and when, for ever reason, it turns around, and now the market is on a serious decline, that manager's also not going to be able to say, wait, no, you don't want to sell this. This is a good company. And they're going to have no choice. People need to understand about how passive investing is influencing the stock market. And watching it and what it does will have more an effect, and no disrespect to the gold and S&P ratio and everything of that nature. That's what's really affecting the market. Between BlackRock, Vanguard, and I think State Street, they have $25 trillion in passive investments. That's what's influencing the markets, and something that we have to watch. And it's not a cop-out, but as long as that money is a net flow, it's going to be very hard for the market to turn around big to the downside. But if and when it does, this will feed it and make the downside worse. And here's the other part that I know financial advisors ain't going to like hearing this, but 2/3 of them weren't even born when I started in this business. They have been used to a basically one-way market. They didn't do anything wrong. It's what they've grown up to used to. That's what they know. You put the gas to the pedal, you go as fast as you can. Occasionally there was a problem. The Fed came along with this tow truck, threw a lot of new money at it, opened up the road, and off we went. If and when there's ever a bear market, it's going to be much more accelerated to the downside, between the passive funds turning the other way and financial advisors not knowing what to do when things don't go straight up.
Yeah, definitely. And, they don't have no choice but to really look at how gold and silver and platinum have outperformed all their biggest picks for last year. I mean, S&P, NASDAQ, NVIDIA, Google. I mean, you put those charts side by side and you see that the metals significantly outperformed them. And so
Darrell, gold has until last year been treated like kryptonite. They wouldn't touch it because it went against their livelihood, stocks and bonds. The big change last year, and it's interesting to see if this continues, was 2 or 3 of the major firms talking about making the 60-40 portfolio, which existed for decades, 60% stocks, 40% bonds, to make it still 60% stocks, but now only 20% bonds, and they suggested 20% gold. The first time I heard it, I went with my ear. Did I just hear that? Can't be correct. But there's been 2 or 3, and don't get me wrong, I can't remember if it was J.P. Morgan or whoever it was. If that starts to transact to more, and we actually turn on, the talking heads on these financial networks, and they start speaking in that regard, that's a dramatic additional fuel compared to what we just. They don't need to do that for the metals to go up. But if that's thrown on top of everything that we just discussed, then I believe we can get to the numbers that some of the people are talking about of 8,000, 10,000 on gold. Let me tell you one other quick story before we run out of time, because I think it's real important. So when I started in the business in 1984, the Dow Jones Industrial had gone almost 13 years just trading between 700 and 1,000. It became so bearish on Wall Street that Business Week ran a famous front page magazine, said equities are dead. Stocks can never go up again. Hard to believe that if you've only been in the last 20 or 30 years. And a man came out of Gainesville, Georgia, a young man, no one knew of, with a theory that no one knew of called the Elliott Wave theory. His name was Robert Prechter Jr. And he predicted the Dow to go to 3,600. People were saying on Wall Street Week, used to be, how can the Dow go to 3,600? Can't even get above 1,000. Well, we all know over time it went a lot further. And the reason I tell that story is a lot of people on Wall Street think that same thing about gold. Gold always traded here. It's an aberration now. It can't possibly not only stay here, but keep going up. They said the same thing back then, but things changed and reasons for owning it changed. And that's what's happening with the gold market. Now, I'm not a banging the drums. I'm not predicting 10 or 20,000. But I say to anybody that says it can't happen, just remember that story. And the same people that said the Dow can't go, well, they got crushed.
Yeah. Yeah, and I bet the shorts are getting crushed right now. So, just so thinking about shares, you mentioned that the metals have more limited upside. The shares give you a lot more leverage, and so I've actually been doing some more research on this and such, and looking at how certain companies performed compared to the physical silver back in the 2008 to 2011 timeframe. And some of the companies, obviously, some companies didn't outperform the metal, but many there were quite a few that did. And I was thinking about this, which I want to get your perspective, because I've always been like a physical holder of gold and silver, which I still hold physical. But when I think about multiplying my ounces, buying more ounces, the silver itself doesn't multiply itself. But if I were to pick good mining and producing stocks and such, I could multiply those ounces of silver. And so just curious in your perspective on how I'm framing that.
So, what's left of my life now is part of a financial planning group here just for U.S. residents. And what I tell all the clients is there's two reasons you own the metals. One is you own it as insurance. I used to sit with, and I'm talking from the days when gold was $3 or $4 or $500, even up till now. But I would always say to them, I want you to buy gold, but hope it doesn't go up. And almost all of them said the same thing in one way or another. They look at you like a little dog gets confused and goes, Mr. Grandich, why do you want me to buy something that you think is not going to go up? And I used to say, yeah, because if it goes up a lot, what you own almost everything in, which was stocks or bonds, is going to go down. So the first reason you own it always was as an insurance policy. And I still think that's important. There are a certain segment, and I'm not in that segment, but in our industry, a lot of people think this way. The world's going to hell. You might need a bar of gold and all just to get a loaf of bread, and all these things. I don't live that way because of how I take my personal faith into my livelihood in this business. But I have to respect those that think that way. So you want to have physical in case that possibly happens for those that think that way. Me, I look at it simply as capital appreciation. What can I make more money on? And you're absolutely right. If you knew for certain that silver's $75 today and was going to be $125 in 2 years, I would say the chances are, even though that's not even a double yet for you on your physical, most silver producers and a lot of the silver stocks will have doubled, tripled, or quadrupled. Some won't because they don't work out, because junior resource is a business where failure is the norm. But that's the leverage that you look for. Think about a gold producer right now. So they're not going to see a wide fluctuation in their cost. Two of the biggest things that they spend money on are nicely priced now. Energy is a lot lower now than it was for them. And wages to pay help. Although there's a little bit of a problem in the future in major mining because there's a lot of young people didn't go into the business and everybody's got gray hair or no hair that's left in management. But the bottom line is, let's just say it goes up another $500. That's a 10% or so increase in the physical gain that you made, but another 500 could be 50 to 100% more profit to them because almost all of it goes to the bottom line and all. That's where you want to own the leverage theory behind that and an assortment. And where it is also is going to play a role. I cannot emphasize this enough that wherever you're going future, you have to be really careful of political and social issues now that can hurt. I was one of the earliest financiers of deals in West Africa in the 1990s when it was, people were going over there. Now, 8 years ago, I said I would never put another dime there because they're going to nationalize all those countries, and they're heading that way. Just like I wouldn't put any money in the state of California, even though it's the United States and so forth and so on. So where people are, really, because I know a lot of people watching your shows are going to be involved in these companies, location is very, very critical. Now, some will argue, well, the risk is worth it. Yeah, the risk is worth it if you 1 or 2% of your portfolio. But I know people, for my own self, outside of the United States, which is in Ireland, my exposure is strictly in North America. And quite frankly, I even feel more comfortable in much of Canada than some parts of the United States as well, in terms of not worrying about, nationalization or seizing control and that type of stuff and all. And there's always going to be people, because there are always going to be somebody who's going to say, what if the government decides to seize our stuff? Is it possible? Yeah. Is it likely? No. But I don't think we can say the same thing in certain other parts of the country, of the world.
Yeah, yeah, definitely. Okay, well, as we get ready to wrap up, I just want to get your take on copper for this year, or if there's another commodity that you're more bullish on for 2026.
Well, I love copper. It's like I said, I think there's a shortage playing out now and a squeeze happening. $6 copper, we're going to need at least six, closer to seven, and sustain before big companies go spend a lot of money to a lot of places where it's quite more risky now for copper. The key to look for, and I'm going to speak my own book for a moment, and that is if you can find projects that have copper and gold, because copper is a more intense, highly costly metal to extract. But if there's gold there and the gold can be initially used to develop the mine, well, that's real attractive. And how we know that's how the majors are thinking is how many major used to be pure gold companies, like a BRICS, are now a gold copper company. And so I would just tell you that tying gold and copper together is a win-win. The other, there's, zinc is a metal I think is important. The metal that seems to be ready to be lifted, I don't say it's ready to go into a new bull market, but it's been a horrible market to be in, and that's nickel. I don't have anything to tell you about or own anything, but I think it's one of the last of the ones that have not participated in any way, shape, or form. Somebody said to me the other day, what about platinum and palladium? Well, for many years when I was a money manager, platinum always had a premium to gold. That's why the platinum card was more important than the gold card at Amex. But will platinum ever be worth more than gold? I don't think so, but it is at least rallied a lot. But nickel is probably the last of the thing to come off the ground, and probably going to see some more people talking about it, because what happens is things get more expensive. People always try to look for, okay, what hasn't moved yet? And that's probably where some people in the metals market are going to start looking at.
Yeah, and to be honest, that's where I've been looking. so I've definitely been actively looking in the nickel space. So, yep, you're definitely spot on with that. Okay, well, appreciate you for joining us, Peter. Where can people connect with you, follow some of your work, subscribe, newsletter, anything like that?
Well, as I told you, as more people going into metals and mining, I'm somewhat pulling away. I'm not as active in it. I'll still speak to it, like certainly with great guys like you that I enjoy speaking to. But most of the work is on my X page. There still is a blog, but anything pertaining to metals is likely to be there. And of course, I have a YouTube channel where I'm blessed when people like you that interview me, I put up those interviews there as well.
Yeah, you got to have me back on the show soon. I feel like I've got my reps in. I feel like I'm ready.
I congratulate you. I think you joined a worthy organization. As you know, for almost 25 years, I used to be the MC at Joe Martin, the dad that ran it. And I really think you're going to see how strong the metals and mining businesses come based on what's going to take place at that show. I wouldn't be surprised it's the biggest attended show that they ever had. And it should be, because people need to recognize that this is the opportunity now is on the share side of the business, not as much as the physical metals themselves.
Got it. Well, just so you know, my suit's at the tailor right now, so I'm looking forward to it.
Well, congratulations. I'm glad that things are working out for you. And as you always know, and what I told you before we started, as long as it's God first, family second, and then our business third, you and I will be okay.
Yes, indeed. Yes, indeed. Seek the kingdom first. Everything else will be added. So I appreciate you, Peter.
All together, brother.